Like there was so much fear. I don't know how to explain the immense fear you have for, creating that first video. There's so much doubt that you have to kind of fight. And you know what's crazy? I think I've got a stat here that only 3.9 million people are using stocks and shares ISA in the
In the
UK.
UK?
It's only 6%. So it's poor,
Wow.
poor take up rate for this stuff. And that's because I'll tell you the truth about investing in stocks. Even when these stocks go up, there's a period of down for them as well sometimes. And you emotionally have to deal with both.
Yeah.
And a lot of people don't tell you that. A lot of people just tell one half. You're telling people Bitcoin, oh, you're in for a reckoning, not knowing that, okay, yeah, it could go to 100k, it could go to a million potentially, but it could also potentially go to 20k before it goes to a million. You're not telling people.
Hello and welcome to Not Another Money podcast. Why is it called Not Another Money podcast, you may be wondering? It's because this is not your typical money show. Get ready for real money conversations and lessons, expert insights from some of our very special guests, and hear some really inspiring stories from everyday people. On this podcast, you're going to learn how to earn more, how to spend less, how to grow the difference, and most importantly, live your best financial life. Hi, Atto. Welcome to Not Another Money podcast. How are you today?
I'm good. You know
Yeah.
what? I'm very excited for this. We're recording early. I think it's nice because it keeps you motivated for the rest of the day to go and
True.
get your stuff done. So yeah, I'm all good.
Yeah, no, good. I'm so glad that you said yes to the invitation to come on the show. I was just like, let me get you on before you get too big to come on my show. So now I'm really happy for you to come on today.
No. Well, my pleasure. Like I said, it's always good to help out, fellow content creators. Or actually, I shouldn't say help out, collaborate. Because I think we should be in the business of collaborating.
Love that.
And helping each other out and just sharing ideas, really. So,
Yeah. No, amazing. No, thank you for coming on. So obviously I know who you are and what you do and how incredible your platform is, but I don't want to, steal your story from you. Tell us a little bit about who you are and what it is that you do.
So actually, I think most people nowadays probably in the online space would know me as a founder of Savvy Wallet. I will say it's kind of like a financial literacy platform on the front end, but on the back end, it's actually more of a media company.
Yes.
Right. And one of the ways that we kind of, let's say, distribute media is through podcasts, where we educate people currently through the Savvy Wallet podcast in personal finance, business, mindset, and, health, and maybe other topics in the future. But actually, in the day, I work as a senior consultant as well. So that's my 9 to 5. That's my bread and butter. I've been in the tech industry for over 10 years, going to be 11 years next year. I've done all types of roles in the tech industry. I've been a business analyst. I think actually on my channel, I talk about how to become a business analyst. So I've been a business analyst. I've been a product manager. I've been a scrum master.
Oh, wow,
I've
you've
been
done
a
it
project
all.
Yeah, I've done a lot. And I think when you're in consultancy, when you're a consultant, you kind of do a lot of things, and it kind of gets you to broaden your skills. So yeah, that's me in the day, and in the evening, founder of Savvy Wallet. Yeah.
Wow, you do a lot of stuff, which we're going to unpack and talk about a little bit more in the show. And you have a big amount of expertise and knowledge in the area of investing, and that's specifically the topic that I wanted to get you on today to discuss, because if there's one thing that people have asked me about a lot is, when are we going to talk about investing on the platform? And I know investing is something that I do, but I'm not the best when it comes to it, and I'm not highly skilled and knowledgeable in that area. So I was like, no, let me bring on an expert to come and talk to the people about it. So I'm really excited to dive into that topic with you today. However, before we do that, what I like to do at the start of my show is play a little game with my guests. It's an icebreaker, a game called Would You Rather. So I'm going to give you, or should I say it's Would You Rather, the money edition. So what I'm going to do is give you some scenarios, and I'm going to say, would you rather A or B? So you're just going to tell me which of the two you'll do.
Okay.
Yeah? Okay, cool.
Yeah, game.
So the first one, would you rather have a guaranteed £10,000 a month for life, or a chance to flip a coin for 10 million?
Oh, so wait, £10,000 a month for life?
Yes.
Or flip a coin for 10 mil?
Yeah.
I would say I would want the 10,000 because there's some form of guarantee that you have, a steady stream of income. And then I think with that steady, because 10 grand I think would be enough for a lot of people to go and do what they want to do in terms of their dreams. So yeah, I would go with the 10,000 to be honest, because I think with the flipping the coin, you're back to square one. If you don't get it, yes, there is, it's like a high risk, high reward, but I think the risk is too high for me.
Same.
You know, so
Oh,
yeah, I'll go with
absolutely.
the 10 grand. Yeah, because you could do there's all sorts of things you could do. I could invest some of
Exactly.
that. Maybe yeah, you might not get to 10 mil straight away, but you could invest that, and then you can add what you've got to it as well. So
Exactly.
yeah.
Yeah. No, absolutely. Yeah. And I'm glad you went for that because I'm like, Mr. Savvy Wallet, you better be coming with the savvy option.
Imagine
So
I'm
yeah,
saying I'm out here
I'm
like
gambling.
yeah,
I'm gonna risk it
gambling.
all. I'm gonna risk
Nah,
it all.
nah,
Okay, fine, good. So the next one then, would you rather
Mm.
have a lifetime of free financial advice from the world's top experts, or £1 million today to manage entirely on your own?
1 million to manage on
Oh,
time.
you didn't even have to think about that
Yeah,
one.
no,
Yeah.
no, 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 no.
Why?
I'm a education guy. I think you know what's crazy. I think it's similar to the JC conversation. A lot of people are
Yes.
kind of smart. A lot of them said, "Oh, I'll take the money and still be able to," which is true. You could potentially still maybe pay them, right?
Yeah.
I mean, the top of financial advisor, 100K probably enough for them.
Yeah,
Just to
yeah.
have 900K after
True, that's
as
true.
well.
What's the Jay-Z story? So, because some
Is
people
it
might not know the
is it
example.
500? I think is it sit at dinner with Jay-Z or take 500K.
Yeah.
That one is tough. I can't lie.
Oh, really?
Yeah, in a way that I do understand the allure of why some people would want to sit with Jay-Z, because maybe they think that they would find out some kind of secret to becoming a billionaire. But personally, I would still take the 500K.
Oh, I'll
because,
take the money all
yeah,
day,
I'll
because
take
the
the money.
reality is he can tell you everything you need to do, but you're not going to do it. So
I
you're
mean,
not
even
gonna...
the man who said, "What am I gonna say?" He said, "Take the 500."
Do you know what I mean? What is he going to say that is going to change your life? No, you're going to have to still do the work. He's not going to give you the money. You're still going to have to do it. So
Yeah, I'm taking
no.
the money all
Just
day.
give me that money and I'll make it happen. I'm sure I can watch enough of his videos online to learn what
Exactly.
he's done. So
Yeah.
no, same. Okay, so the next one, would you rather be able to live rent-free anywhere in the world, but never own a property of your own, or own your dream home with a hefty mortgage?
Wow, that's a very, very interesting question. Okay, so I'm asking for the intricacies of it. So if I can rent anywhere else, does that mean I can never buy anywhere else
Yeah.
by myself? Oof. Okay.
Never own a property, yeah.
Never own a property. Wow, that is actually a tough question. I think that's a tough question because, you know, I don't personally invest in properties really. That's not my form of investment. But I'm thinking from a point of view from, let's say that was somebody's point of investment, then not being able to invest in property as an asset would be very tough. So I guess it's free rent living, no expenses. Okay, the investor in me, the stock investor in me, or crypto investor, should I say as well? Probably would go rent free.
Yeah.
Yeah, I think I'd go rent free. Yeah, yeah.
Yeah, no, I think I would have done the same, to be
Yeah,
honest. Yeah,
yeah.
yeah. I would have gone rent free anywhere, because owning, I guess maybe because I own a property now, it's
Yeah.
like, it's not
It's a
everything
lot.
it's cracked up to be.
Yeah.
Like, having that mortgage payment every month is a big commitment. So imagine not having to worry about mortgage and not
Yeah.
worrying about a roof over my head, which is, I
Yeah.
guess, one of the basic needs that we have,
Exactly,
right? Not
yeah.
having to worry about that.
It takes
And
away a lot.
it takes
For
away
you,
a
to
lot
be
of
honest,
pressure.
right? You can achieve financial freedom
So
lot
much
quicker.
faster.
Yeah,
Absolutely,
yeah,
yeah.
yeah.
So yeah, I'd go with that. Okay, cool. So the next one, would you rather have a job that pays you a lump sum every 5 years, or a steady paycheck every 2 weeks, but it's half the price of your lower annual rate? Yeah.
If the lump sum's more, you said every what?
5 years. So you get paid once every 5 years.
Once every 5 years. No, no, no. Do the lower amount.
Yeah.
Because I feel like you could, again, use that money to grow it in certain ways, whether that's for your business, whether you're investing in yourself personally, whether you're investing in companies as well. I think when you have money now, there's so much more you can kind of do with it. Also, with the 5 years, there's inflation to think about. What happens to that? So it's also, you're waiting that long
True.
and it's not growing over that time. So it's kind of
You
value
get
in
technical
itself.
with the question. Yeah.
No,
It's true.
yeah, no, but I have to
But it's
think
true.
about that
It's
stuff,
true.
right? Yeah,
It's
yeah,
true.
yeah.
That,
You do have to think
yeah,
about
that
it
money
that way.
today is not the same in 5
It's
years.
not,
Yeah,
yeah.
that's
So if
the
you
point.
get it, if you get it up front, you have more options to do stuff with it now that potentially may even outgrow it in what you get in 5 years or meet it. So
Okay,
yeah,
good.
yeah.
We could tell you're the investor on the show.
Yeah, I
So
do think like that. Yeah, I do.
you think
Yeah,
like an investor.
yeah, yeah,
Okay,
yeah.
fine. And last one then. Would you rather have the power to turn an idea into a successful business, or have a one-time windfall of £1 million?
You know what's Mm, uh, you know what I'm battling against? I'm battling against my tendency to want to build stuff myself
Yes.
versus being smart and being like, take the
Yeah,
million and
yeah,
get
yeah,
rid of that ego and just use it. I would say, you know what? You gotta be smart and just take the money.
yeah.
Yeah.
You see, you've made me second think my answer too, because
Yeah.
I would have initially gone with the building from the ground up, because, like you said, it's that sense of achievement and doing it
Yeah.
myself.
Yeah.
However, if I take that million, I can then go on
You
to
can
do
go
my
and you can
business
start another
anyway.
business as
Yeah.
well. Yeah, yeah. But then I guess when you say successful, I guess maybe you're thinking potentially it could you could make millions from that too. Yeah. It's tough.
It's a
That's a
tough
tough
one.
question, yeah.
Yeah. So
I'm
you,
50-50 on it.
no, you
Yeah.
can't be on the fence.
Yeah.
We need
Can't
an
be in it.
answer.
Um no, I'll take the mill. I'll take the mill. Because you know what? I think a lot of people do start businesses. Of course, they want to grow something, but also just to have that windfall to go and do something else, go and live
True.
life, travel the world. You know, that's not something I've really done, like the whole career break. And I think I
Mm.
would value that. You know, I would value being able to invest in others. I value being able to invest in lots of projects as well. So I
Yes.
think I'll take the million, to
Yeah.
be honest. Yeah,
Yeah. Okay, I'm going with that too. Yeah.
yeah.
Give me the million. No,
Yeah.
that's good. Okay, cool. Thanks for playing.
No, welcome. Yeah,
Yeah.
it's fun.
Yeah, it is, isn't it? It makes you think sometimes.
Yeah, it makes
Yeah.
you think. It's tough because these kind of there's no right or wrong answers.
Exactly.
I think people need to just understand what's right for them and just understand what they're kind of doing. So
Yeah, yeah, absolutely. Yeah. No, thanks for playing. The next segment of the show I
Mm.
like to do is called Not Another Money Moment. So this is
Okay.
Not Another Money podcast, and I like to invite my guests to share a significant money moment
Mm.
from either their past or
Mm.
like from childhood or adulthood, a significant money moment that has had an impact on them
Yeah.
or how they view and manage money. So
Okay.
anything that comes to mind?
Yeah, for me, honestly, you know what I think made me kind of embarrassed me into personal finance, and I think I've talked about it a little bit on my podcast, but it's essentially I went to the Sony store because I wanted to get a tablet, right? But I had bad credit previously. I think I knew I had bad credit. I don't know. I don't think I was checking, you know, all the time. And it was because I had a student overdraft at university, spent up the money. I wasn't keeping an account active. I was supposed to have my student loan in there. Because I wasn't keeping it active, they closed it, put me into default. So I was on a payment plan for about 3-4 years, I think. And obviously, default was on my credit report. So I tried to go to a Sony store post uni to get a Sony tablet. Failed the credit check in store, and that was very embarrassing for me.
Yeah, I can imagine.
And I think that moment kind of made me think, you know what, you kind of need to change what you're doing. Like the current kind of trajectory that you're on, it's not sustainable. You're not gonna be in a good place in a few years' time. So I think for me, what was weird though, I was always funny following money content, not on like YouTube or Instagram, because none of that existed. But like I was subscribed to, it wasn't even called Money Saving Expert. It was called Martin's Money.
Oh yeah, back
Like
in the
yeah,
days.
yeah. So I was
Yeah.
subscribed to that. I was subscribed to Motley Fool. I think I always had an interest in money.
I was gonna say at that young
To be
age, just
fair,
thinking about that.
yeah, I was. I think I had an interest, but
Okay.
not like it wasn't like to the point where I was studying it. I was
Yes.
just subscribed to it. I wasn't like reading
Yeah.
their stuff, and really I learned from that. Like okay, like starting small, right? Like okay, how do you kind of build a budget? How do you kind of get to a point where you're kind of a bit more disciplined with money? So it wasn't like 180 straight away. I was starting very small, right? So for me, I was trying to get better at saving because that was one of my problems. I wasn't really great at I was a bad saver, right? So I'll start off with something little like 50 or £100 and try and get through the month of trying to save that. And then over time, I kind of built that, you know, that discipline, you know. I figured out, okay, what about paying off your payment plan? And I think once I finished completely paying off that, I think that was a bit of a weight off my shoulder. I think I still had a default on my credit report for a while, but that was like as a reminder to be like, you need to stay
on
fixed
this.
up.
Yeah.
You need to, you know, I think when you have a black mark like that, and not only that, the bank as well, I was not able to get any products with them ever again. Right.
Ever again.
Well, now I can.
Oh, I was thinking what?
At one point, there wasn't. No,
Oh,
there wasn't.
really?
Yeah, there was. It was crazy because I think something happened. I think we were trying to. I can't remember. There was something I was trying to get through them, and then it was even after my default had come off, and I think we were trying to get a mortgage within the family or something like that. This was before I got my first property, right? And I think them specifically said like no, and I think I called them to speak about it. It's like, oh no, like even if the default's on, they basically tried to say to me like, oh yeah, you'll never be able to get a product of us again ever again. That's what they kind of said, but that's not true. That's actually not true, because they're now coming up with recommendations. So
okay, go on.
now the credit is good. They're now coming back. But yeah, at that time, so that served as like a reminder to just be, you've got to kind of stay on top of these things, because these things can really last a long time. The impact of it, such a small thing had such a big impact, on me. So yeah, that was the story.
Yeah. And what age were you around the time of you getting this? You said, was it 18? You said that
I was,
you had the tablet.
No, it would have been in my 20s.
Okay,
so
okay.
I would have been maybe 23, 24.
Oh,
I would
okay,
have
okay,
tried to get it.
fine.
And then, but I got my student loan 19. I think I got my student no, not student loan, student account.
Okay,
at 19.
Yeah, that's when they get us all.
Yeah. So I got it around that time, 19. And I think, when did I get into default? Maybe 21, 22. That's when I got into default. Yeah.
Okay.
Yeah.
Okay. Oh, go on.
No, I said it's mad. Yeah.
No, I can imagine. Okay, no, thanks for sharing that money moment. I always like to ask my guests this, because everyone has a different thing that sticks out in their mind, and it always kind of changes the trajectory of their financial decisions moving forward. And I can see you've gone from that to now becoming a finance expert. So sometimes we do have to go through these things for us to grow and become better versions of ourselves. So no, it's amazing that you were able to pay it off, and obviously now you help other people to be better with their money.
Yeah. I mean, I think that was really the drive for Savvy Wallet, was the fact that, okay, I managed to do that. I wasn't great with money. I wasn't taught with money. Like most of us, we're not taught with money. So if I think if I was able to go from that situation where I was poor, I'm talking absolutely poor with money, to a place where I'm good with money, then anybody could do it.
True.
Right? So, and that was the motivation for me to be like, look, like I can teach other people about this. However, I don't think I really had a great understanding that this was a big problem like that. I didn't, because you don't know, like I don't know how to describe it. Like financial literacy, when you're kind of ignorant to stuff, like financial literacy wasn't like a thing.
Absolutely.
I just knew I struggled with it. So I thought, okay, if there's anybody else similar who's struggling with it, I can help them. I didn't think it was some UK-wide problem. Like, oh my God, like, none of us know. I just thought I was just one of those people that, like, why am I bad with money?
Yeah, exactly.
You just kind of assume that, right?
Yeah.
So,
No, that was similar to my story. Same exact kind of thing in terms of financial education. It's something we're not necessarily taught, obviously, in school, sometimes not growing up with our parents, etc. So we just become adults, and we're just expected to know what to do.
It's adulting, right?
Yeah, it's adulting. It's part of the responsibility of being adult is to manage finances and manage your home and manage bills and all the rest of it. But if you've never been given those tools, how do you know what to do? So yeah, that's why platforms like yours were built, and platforms like mine as well. So no, that is incredible. But what I want to do now is kind of go back a little bit in time to kind of understand the backstory that led to the money moment that you shared with us, in terms of you getting into that position that you wasn't able to get credit for that tablet. What was your relationship like with money as a young Atto? What did that look like?
I was just a spender. Yeah, man, I spent everything, man. I just was when did I started work? I started working young, actually, funny enough. I started working at 16.
Yeah, same.
Yeah, so I worked young. So
where did you
work? My first job was Chesterton.
Oh wow, that's a cool job.
Yeah, but it's far though.
Yeah.
So I couldn't sustain that for a while. But I think actually working from such a young age, I think is giving me the work ethic that I have now. And not only that, just skills, customer service, communication. But it's so funny, even working from such a young age, it's not like you're not betting it with money. You just got it.
You just have access to it sooner.
Yeah, you just have access to it sooner. So yeah, I started working from a young age. I was earning income. I was working right up until I went to uni. So I went to uni a bit late because I was flunking a few years. So I was one of them ones. I was flunking.
What uni did you go?
I went to University of Sussex.
Okay.
Yeah. So
that
was law.
Law, okay. Oh wow, so totally different to finance.
Yeah. So law, and then my I did a master's. So I didn't want to do law in business. It's called. It was at the time. It was called Business Systems Analysis and Design. So it's basically like business and IT combined. So yeah, that's how I think in terms of what I'm doing consultancy, it kind of makes sense. But yeah, so I worked from pretty much from 16 to 19 or 20 or something like that. So I had worked in a few different places, but I was spending most of the money. I wasn't saving. I don't think I went into uni with any savings. The only thing I saved for was a car.
Oh wow! Oh, well done.
Yeah. I saved for a car.
That's a big
at
deal.
least. Saved for a car. I saved to do driving lessons. Yeah, but that's because that's like a means to that. You know, when you've kind of got. I think now that I think about it, you know, when you've kind of got a goal, I think that motivates you to save.
Of course.
For me, when you're a young person, you want to drive, so you will do anything. So if you've got money coming in and you've got to save, you will save for it.
Yeah, I guess.
Right? So that was my goal. Obviously, I don't think I was that strategic in terms of, okay, like, now I'm becoming a save. It was just more, okay, I want a car. You know, I need to pay for driving lessons. I need to pay for, saving a car and whatnot. But yeah, I was a spender at university. I would barely last on my maintenance, to be honest. I barely last on it, man. I was just spending it. And even actually have a story around. So the car that I bought, I sold it because I didn't need it. I was living in Brighton. I didn't really need it anymore, right? I was living near campus. If I need to go into town and get a bus, so there was no point of a car. Plus, nobody was really driving. So I sold my car, and but I got it all in cash. I got all the money in cash. I had it in a bag.
Oh gosh, I'm
and
scared.
then whenever I went out, I'll take the money until zero. Till zero. It was bad.
No way.
So yeah, I was bad. I was bad when I was
How
spending.
much did you sell out the car for?
I think it was about 900 to something like that.
You spent it all?
Yeah, I spent it all.
And nothing to show for it?
No.
Yeah.
Nothing to show. I did not leave uni with anything to show for it.
Yeah.
Apart from my degree. Sorry, I'm not talking about the degree. From a money perspective, I did not. I had a job even like my second to final and final year. Nothing really to show for it.
Oh my god.
Yeah, I was a spender.
You was a big spender.
Big one. Yeah.
Okay, any ideas where that stems from? Have you ever taken time to kind of unpack that as to why you were such a big spender?
Yeah, you know what? I think it's just because at home I wasn't taught about money. Let's say, and to be fair, I don't blame my parents. I think, like I said, most of us are not taught about money. It's not financial education. You kind of do what you know. So I wasn't, let's say, taught, okay, this is how you kind of save. This is how you kind of, invest and stuff like that. None of that was taught at home. So I think for me, the default thing was, okay, you get money, you spend it.
Fairs, yeah.
Right? That's it. You know?
No,
so yeah. So I think that's where it kind of stemmed through a lot of that. And I think when you also have your own money, there's a bit of freedom to spending. You just feel, but then you realize actually you have to put a few guardrails on, otherwise you just go off the cliff.
Exactly.
You know? So,
going back to your story, and you was talking about the fact that you were able to pay off all of your debt and improve your credit score, and then you made a shift into the financial education and built your whole platform to help other people learn the stuff that you didn't learn and hadn't been taught at school. What prompted you to actually do that? Obviously, I know you wanted other people to learn from your mistakes or help other people to avoid some of those pitfalls, but other people would have been in similar positions to you, right? And I was in that same position once upon a time in debt, and we decided to start platforms. Other people maybe wouldn't think to do that. They just pay it off and move on with life. I guess where I'm going with the question is, what is your drive? What was your drive to do that? If that makes sense.
Yeah, no, I get it. Yeah, no, thanks for that question. It's a good question, to be fair. So you know what's mad, right? Like, I think when I got to a point where I knew that I was better with money, where I had decent amount of savings, right? Where I was on the path to saving for a mortgage, I was able to, rent by myself, where I was quite comfortable and I had like kind of a system in terms of, okay, this is in terms of your budgeting, okay, this is what you're allocating for yourself for spending, this is what you're saving towards your mortgage, deposit, for property, and then within a few years you'll be able to afford that. At that time, I actually was originally going to start a blog for young people. I have actually the notes still in my phone, but I just didn't go through it because I guess I wasn't brave enough. I always wanted to start a business, that's the truth.
Yeah.
I've always wanted to be in business. But yeah, I just wasn't confident enough. There was probably an element of fear in it. I was comfortable in my 9 to 5, so I was like, yeah, I'm not gonna do that. It wasn't until I bought my property. I bought my property, had managed to, get to a point where I bought my property, and I was rebuilding. Again, very comfortable in my 9 to 5, and then I started thinking, you know what? I want to start a business. I want to start a side hustle. Why not, right? And then I started writing down, okay, different side hustles I could do. Oh, okay, I could sell on Amazon. I could do this, and then for some reason, teaching people about finance came up as one, and it was like, you know what? I feel like I'd be really interested in doing this because I love talking about it. I'm very passionate about it. I've got a story to tell in terms of, I've gone from, A to Z, right? And for me, I think that because I previously wanted to do a blog, I was like, actually, why don't we just do that same idea but for video? But I don't think I really knew what it looked like. I was just like, I was just gonna start with YouTube videos, and then we'll see where we kind of take it from there. That's as far as the vision was at that point, if I'm being like really honest, right? And because of that, I was like, you know what, you have to have an Instagram page. It just makes sense. And so that was the drive really for it. I just really wanted to. I think it was my second point. I was like, okay, you've now got an opportunity where you've now actually achieved like a big goal for yourself. Like you've really gone from bad to you've bought a property. That's crazy.
That's a big deal. Yeah.
That's crazy, right? So, all right, cool. Let's start this side hustle. You keep on talking about this blog, let's finally do something, right? Like, so I just like, you know what, I'm gonna do it. I almost wasn't going to actually. My friends had to really, friends and partners was like, no, you got to do it. So I had come up with a name. I'll show you offline.
Yeah.
But I had like, this is gonna sound embarrassing to people, but I think I want to give people an insight into my mind. So I can be very creative in a way. So I probably have 50 names.
Oh wow.
Yeah, like written. I'll show you after. You'll see. It's crazy. So I have 50 names.
And this was before ChatGTP, so you made them up yourself.
Yeah, I just written bare names.
Wow.
And then Savvy Wallet stuck out, and I just looked at it. I was like, oh, okay, I think I like this one. And then I asked people like, oh, what do you think of Savvy Wallet? Like, oh yeah, that's a dope name. Yeah, go with this one. Go, because I also showed them this. Yeah, go with this one. Go with this one. So I was like, okay, cool. We'll go with Savvy Wallet. I recorded my first video with my wife's camera, and I'm not gonna lie, it took me hours for a 5-minute video. I was sweating behind the camera. It was so I felt so embarrassed.
The first video is a lot.
It's a lot. And there was so much fear, like what's people gonna think? What's if nobody watches it? What if, like, how am I gonna come across? Like, there was so much fear. I don't know how to explain the immense fear you have for, creating that first video. There's so much doubt that you have to kind of fight. It's crazy. It's crazy the amount of doubt. Like, I know we may make it seem like look easy and stuff, but the amount of courage that it takes, so any content creator, I always respect them because it's so hard, like, to put yourself out there. And I know I'm not saying that people shouldn't say bad comments, but they should also, I think, be considerate. That it's not easy to put yourself out there for the benefit of others, because at the end of the day, when you're content creator, you're actually doing it. Yes, you are making money, but you're also benefiting other people.
Exactly. Yeah.
Right. If we wasn't there's no entertainment, there's no education, there's what you watching, right?
That's true.
I do want to remind people to don't take that for granted as well, because I think people do take that for granted because it's so easy. I just see a creator, but we are also benefiting you as well. Of course we get benefit, but we're also benefiting you.
That's good.
So it just took me to that time. I remember I was scared, and I was just telling my friends at work, I don't know if I should go through this. Nah, you got to go through
you told
it.
your colleagues in
they were like my proper friends. We're still friends today. They support the thing. So no, not like
no, I was gonna say
friends, like friends that were like actual friends, not the these are like my boys, not my colleagues. Imagine that,
So I'm like, what colleagues? Yeah, it's true. You have to differentiate.
These are my actual friends. Yeah,
you just happen to work at the same place.
So I spoke to them about it. I spoke to my wife about it. They said, yeah, no, you got to do it, man. It's a good idea. Go for it. Like, do it.
So what was it that made you then do it? Because like you said, a lot of people have the idea, right, that they want to create content and they want to put themselves out there, but that fear that you speak about is a real thing, right? It's a big deal, and for so many people, that's the thing that stops them from pushing forward and doing it. Like,
Yeah.
how were you able to persevere and still put yourself
I
forward?
think with their support, to be
Yeah.
honest. Yeah,
Okay.
having that support, having, my wife's support, my friends' support, my family support
Yeah.
in doing it. I think that's important. If
Yeah.
people kind of believe in, you need that belief early on. That's the truth. You either need their belief or your own
Yes.
self-belief. You need some sort of belief from somewhere,
That's
right?
so good.
I think without that, it's difficult to get over the hurdle. Or you're the type of person that just does it. There are those types of people that they don't need belief and they just kind of just do it. I think I've now become that. I've now become the type of person where it's not belief anymore. I'm just doing it. I'm more almost on autopilot. It's got to get done. It's got to get done, right? So I think it's either one of those three, really, in my opinion, right? That you have to kind of be. So if you've got support, if people are supporting you, say, yeah, it's a great idea, go for it. I think that's good to launch you, and you take that momentum to get started. But yeah, I think that's kind of required, really. Yeah.
No, that's good. That's really good. I like what you said about having belief in yourself or somebody else's belief, and I think for a lot of people that are self-made or that achieve levels of success, it's because they have that innate self-belief, right? But then for a lot of people, then you have the other side where it's like you may not believe in yourself, but if you have enough people around you, they can like push you forward to do that. So no, that's so cool.
Yeah,
I like
important.
That. It is. No, it really is. It really is so important because Lord knows this stuff is not easy.
It's not easy.
It's
It's not easy. Yeah, it's tough. It's tough. That's why I say like people should just try to be more considerate of content creators because it is very hard, right? It's not easy to do what we do. We try our best, right? That's the truth. We try the best we can. We're not perfect. We're human beings, right? And I'd rather us show up online being authentic than highly curated. Like, do you really want that?
No,
people
no
don't
one
want
wants
that.
that.
You don't want somebody who's robotic or curated. You want us as ourselves. So okay, so also accept that there's gonna be some flaws. We're not gonna be 100%, right?
No, that's
so,
good.
Yeah.
No, thank you. That's totally different direction to where this podcast is supposed to go. But I'm so happy that we did go in this direction because it is so important for people to understand, like we said, what goes into being a creator and just to show the journey that we've been on so far.
Yeah.
But now I want to take it in a different direction, which is one of the main reasons why I wanted to have this conversation. And this is all around the topic of investing, because investing is something that a lot of people haven't started doing or want to start doing, but don't know how to do it. And it's such a broad topic and such an expansive topic, right? So people just don't want to get started because they don't know how to. So first of all, I guess just for layman's term, talk to us a little bit about what investing is and why it's so important that people need to do it.
Yeah. You know what's crazy? So when we talk about investing, it's essentially, I would say, putting money into an asset. If I'm going to try and, be as jargon free as possible. So you essentially put money into asset with the hopes that it will grow in value over time. So you can sell the asset or you can kind of receive some kind of income from it, right? So that's what investing is at a nutshell. I think most people understand the concept of property investing or investing in property. And I think why people can relate to that a lot is because property is physical. We all live in homes. You all have to live in a home, pretty much. So I think that's quite understandable for people. But I think when it comes to things like investing in businesses, it becomes a bit more difficult for people to understand that because I guess it's a bit more digital in a way. Crypto now is another emerging digital thing. But yeah, people understand investing in property, gold, because it's physical. You can see it, you can touch it, you understand that. But in businesses, they're like, what is that? Like, that's confusing. So that's where I think the confusion happens. But yeah, investing is essentially trying to invest in assets that grow over time, and then you want to, sell it for more in the future or get income from it.
And so then why would you say it's so important for people to invest as opposed to saving? Because I think for a lot of us, maybe our parents told us about save your money, save your money, save your money, don't spend it all, right? But that might be as far as the education has gone. So now we're hearing a bit more about, no, you need to not just save, you need to invest. Why is that so important?
It's important because you want to beat inflation.
Yeah.
Investing is people invest to ultimately, over the long term anyway, to essentially beat inflation. That's number one, right?
I mean, you say inflation, just in layman's term again, for those that don't even know what
inflation is. So inflation, well, let's say inflation rate is essentially the rise in goods and services, right? So if you think of, like, for example, everybody likes to use the Freddo bar.
Yeah, I know Freddo
But
gets
let's
it.
think of chicken and chips,
All
man.
right,
Chicken and
oh
chips is
my gosh,
expensive, bro.
£1 chicken and chips back in
Yeah,
the
man.
days.
Yeah, back in the days, right? So, I remember, like, when I was younger, you could get like 2 wings and chips for £1. All that stuff. That ain't happening anymore,
No.
right? And that isn't happening anymore because the price of that good has gone up in value. So that's what inflation is, right? Over time, the price of goods and services have gone up, right? And how they kind of say say inflation to us is in terms of a percentage, right? And I think historically, inflation, so price of goods and services, has gone up by 2% per year. But recently, because of COVID and other things, let me not say because of COVID. I think there are probably a range of factors. I don't want to get too technical on the podcast, but there are a range of factors of why it's been more than 2%. But essentially, inflation has been higher. The inflation rate has been higher than 2%, right? So it means that the value of our money essentially is becoming devalued, right? Because our money buys less, essentially, right? So with investing, you are trying to beat that inflation rate, essentially, right? So you are trying to make more than 2% return on your money. So that's one reason why people invest. It's also a chance for you to build wealth. So investing is known to build wealth. So we actually have ISA, stocks and shares, ISA millionaires here, and we'll talk a bit more about stocks and shares, ISA. So it's opportunity for you to build wealth. It's opportunity for you to build generational wealth. Not just wealth. Wealth for me is in your lifetime. Generational is over lifetime. For you to potentially pass that on, and also you can get income from it as well, right? So there's a lot of benefits of why you may want to kind of invest, but essentially it's you are trying to beat inflation. You're trying to build wealth. Those are the two main factors of it.
So if I had put my money in like a high interest savings account and I'm getting like 1 point something or 2-3% interest, is that not enough?
It's not really, no, because if inflation is at 2%, then it's like you're not really beating it. The value, again, not trying to get crazy technical, but essentially the value of your money hasn't changed. So if inflation is at 2% and then your interest rate's at 2%, then it's like,
then I'm just breaking even.
yeah, essentially, kind of. In your mind, you wouldn't think that. You'll see it as, oh, but yeah, it's still gone up by 2%, which is true. But actually, goods and services are more expensive.
So actually, it hasn't gone up at all.
Not really. Yeah, right. So with the stock market, I guess when we say the stock market, globally, again, we'll go into what the stock market is. There's a lot
there's
of
so much
because there's a lot of stuff we've invested in. I think it can become confusing, but I'll try my best to explain everything. But with the returns on investing in the stock market, the returns historically, I think over the last 100 years is between 8 to 10%. So it's way more than inflation, right? Historically, right? That doesn't mean just because it's happened in the past, there's also is no guarantee for the future. So I do want to just say that to people. There's also no guarantee, right? We don't know, but we obviously try to use some of that data to potentially inform us. It could be more than that, or it could be less than that. It's possible, right? No. I mean, it's always good to have savings. I would say for people, if you need the money for less than 5 years, yeah, put it in a savings account. If you need the money for like a deposit, yeah, keep it in a savings account. If you need it for a car, holiday, wedding, keep it in a savings account. Don't be trying to put it into crypto. Don't be trying to put
flip
into
it quickly.
No. People do that and then they lose it all. So, with investing, it's a long-term activity. They say minimum 5 years. I'm gonna be really honest with you. I think you should be looking longer. 10 years minimum, really, because even in 5 years, that's not enough time. For your money to grow to the level that you'd want it to, right? Like, really, if you're taking your money out in 5 years, then you haven't really given it a chance for the money to compound, for it to really grow to the level. So I think if you're investing, you should really see it as, look, this is something that I might want to take out in 10, 15, 20 years. Honestly.
Okay.
Yeah.
But so two questions. My money. I'm just speaking as a listener, basically. So I'm just thinking, my money in my savings account is safe. Nobody's gonna take my money. I'm not gonna lose it. Whereas this investing thing that you're talking about, I could lose my money, and then what?
It's always an interesting question. Yes, you can lose money in investing. Definitely potential to lose money in investing. So I guess what people need to think about, especially if you're just thinking about investing, is that you shouldn't really be looking. My personal thing is, don't look at investing individually into companies, right? So that's when you own shares in a company, you're investing, not actually really directly, you're just owning shares of company, but it means that you believe in that company potentially. But when you own shares of just a company, just like, whatever the shares are, whether it's one or two or 10, the price of that share is more volatile. And what volatile means is that potentially, in terms of the price going up or down, it is essentially more frequent in a way, right? And the reason why potentially a company, why it could be a bit more volatile, is because maybe it's the size of the company, maybe it's not as big as Apple, maybe it's a growing company, so a lot of people don't have a lot of confidence in it. It doesn't have a lot of track record. Whereas what they call a blue chip company like Apple has been in the game for a while. They've got a good track record. They're fairly stable. So therefore, the price of their stock doesn't go up and down as much, because Apple's Apple, man. Everybody uses Apple. They're, whereas a smaller company. So that's where a lot of people go wrong. What they're trying to do is they're trying to invest in much smaller, unproven companies, and then they lose money that way. And even with Apple can have a bad, like, let's say they could have they could do earnings, which is when they essentially talk about their business results, how much revenue they've made, how much net income they've made, and stuff like that, right? What direction they're trying to take the company. They could have a bad quarter, and then their stock could go down by 5%. So the price of of their stock could go down by 5%, and so that can happen. So I think a lot of people, where they kind of go wrong is when they want to start investing in the stock market, they're like, okay, let me try and invest in Apple, let me try and invest in Amazon. And I think that's the wrong way to start, because you're not actually building your investing skill by doing that, essentially, because you're not going to be used to, oh my god, my money's down 10%. What is this? This is crazy.
That
this is a
happened
scam.
to me on
Let me
free
get out.
trade.
Yeah.
With Coinbase, I invested in it because there was a time when everyone was talking about Coinbase and how it was the next thing. So I was like, yes, let me invest. I think I put like 100 or 150 pounds in it. I think it's like 10 pounds at the moment. It's gone down all the way.
That's
but I've
what
left
I'm
it
saying.
in there. I haven't taken my 10 pounds out. And like
Keep
one day
it
it
in.
might go back
Coinbase.
up.
Coinbase is. Oh, check it out.
I haven't
mean,
looked at
crypto's
it
back
in
on.
like 6 months, to be fair.
Oh, check it.
Oh, really?
It'd probably be good. Yeah.
Oh, do you think? Because literally within like a month of me investing, the money was gone.
Yeah, crypto's on a rise again.
Okay.
Yeah.
Oh, so there's still hope for my money.
Yeah.
But it's not a sound
It
thing
depends
to
on
do.
how. It depends on when you bought it at.
Yeah.
So yeah, that's the thing. So I do want to talk about the investing thing. So the investing thing in terms of stocks. So when we're talking about it, so when you know what's crazy, right? I think you can liken it a lot to property. When you buy property, right, you're buying a property at a certain price. When you buy stock, which is basically ownership, units of ownership in a company, right, you're also buying that at a certain price, but you're not buying the whole company, right?
Yeah.
So you own a company, right?
Yeah.
I own a company. For people that for people that don't have companies, when you start your company, right, you have shares, right, in the company.
Yes.
There's a certain amount of shares. It's the same for these big companies as well, right? So they have loads of shares out there, and really, when you're when you're buying a share, you're actually buying it from somebody else who owns it. So if I wanted to buy shares of Apple in the stock market, I'll be actually, like, for example, I could be buying it from you, right, at this price. So you could be like, you know what, not that you actually doing it, but it's essentially the price is kind of set through the market, supply and demand of the market. No different to property, right? The supply and demand defines what, the value of your property is. So it's the same for stock, right? So each stock would have a price. The price doesn't matter so much in a way, because Apple, for example, could be £300, for one stock, and Amazon could be £50 for one stock. That doesn't mean that, although Apple is more. Actually, let me change the example. Amazon could be £500 for one stock. That doesn't mean that because Amazon stock is just £500 for one stock, that Amazon's more valuable. It just means that's what they've priced it at, right? Where you want to understand the value of the company is through what's called the market cap, right? Which is, it means all of the number of shares times what the stock price is, right? And that's what gives you the value of the company, whether it's trillion, billion, or whatever. So that's how you understand what that is. But yeah, I think where people go wrong is like they look at investing in stocks rather than looking at index funds. So when I actually started, I actually looked at index funds. But even index funds is a minefield as well. There's loads.
Yeah.
There's loads. And I'm not going to lie, I don't think the investing industry makes it easy for us investors to, or potential investors to, choose from just a small select. They have too many options. Unfortunately, that is the problem. So yeah, I think where people want to kind of potentially look at is investing in potentially index funds or ETFs, which are quite, the index funds and ETFs are kind of very similar. Index funds, I kind of see them as you can only really get on this platform, like a Vanguard or Fidelity. ETFs, you can kind of get them on a range of kind of platforms, your free trades, your trading 212s, etc., stuff like that.
Okay, so again, I'm conscious of some of the listeners not even knowing what index funds are or exchange traded funds are. So what I want to do, or ask you to do, is kind of explain a little bit about what they are versus maybe investing in an individual stock.
Yeah. So yeah, with index funds, the way people like to describe them as is like their basket of investments, right? So instead of you investing in just Apple, you will invest in a basket of investments that may contain Apple, Amazon, it may contain property, it may contain gold. The reason why people do that is, one, because maybe they don't want to have to self-select their own investments, so their own stocks, their own property investments. When I say property, maybe I'll go back to that in terms of property, maybe their own type of gold investments. I'm doing that because it's not actually you're investing in physical gold. So that's the reason why they would want to do that, because they'll be well diversified straight away. It's less complicated for them. They don't have to figure out what company will do well at what time. They don't have to keep on, in terms of earnings report, keep on checking, okay, how's Apple doing this quarter? Let me do my financial analysis to see like where I think the value is going to be in a few years. They don't have to do all of that kind of stuff. And also, investing in these basket of funds, they're typically low cost, so there's not a lot of fees associated. So that's why they're popular, because they're referred to as passive, right? You're a passive investor. That's what people see it as, because you're not having to keep on tabs. You have some kind of automated direct debit to invest in these baskets of funds, and they're well diversified. They could be as diversified of I think these days some of them could have thousands of companies that they diversified in, which is good for your portfolio. So that's what it's kind of likened as. And a lot of people like to use a chocolate bar example. Let's use the cereal. I was thinking about this.
Okay.
Let's use the cereal example.
I wanted to do something different.
Yeah, I wanted to do. Let's use the cereal example, right? You know, the mini little.
Oh my gosh, the variety packs.
Yeah. So I thought, like, let's think something different, because everybody uses the chocolate example. What about the cereal example?
Good.
I think actually the cereal example is actually like quite a cool one, because you can actually quite like imagine that, right? Like the you got the 6-pack or 12-pack of cereal. So that's what it is, right? Like when you invest, let's say instead of just getting the Kellogg's cornflakes, you're just you're buying this 6 box of I don't know, cornflakes, Cocoa Pops, Frosties, and stuff like in one, essentially. So that's what that's like, and that's the difference between investing in stocks and ETFs. So ETFs is in index funds. It's usually you're investing in loads of investment. So companies,
Yeah.
potentially properties, whereas stocks is just one. You
Okay.
just like investing directly for
Yeah.
this thing. Yeah.
So for a beginner investor, then you wouldn't recommend going straight for the stocks. More
No,
go
no.
for the ETFs and the
Yeah,
index
index funds.
funds.
Yeah,
Okay.
yeah. Because it's just because of, I think with investing, I think the truth is, for me personally, if I talk about my personal journey, so I started with index funds. I wasn't even teaching myself investing at that time, and this was years ago. This was before I bought my property actually. And I think that you need to give yourself, and also didn't understand what was going on. Why is this going down?
Mm.
Oh damn, I ain't made no money.
Yeah.
Let me get out of it. So you don't have that
Yeah.
understanding. So I think if you invest in stocks and then you see a 5 or 10% down, you're gonna freak out and be like, "Oh, investing is a scam," right? So I think if you look at something like index funds and ETFs, they're less volatile. Remember, I used the word volatile. So it's unlikely that they're gonna, if you're in a well diversified one, right? What when I say well diversified, people like to say like global index funds, global ETFs. So you could Google this, like what global index funds, what global ETFs are out there, and you can see a list and just do some research on your own. So those ones, they're quite diversified because they invest in, you're essentially investing in companies across the world. So when you're in a well diversified index fund or ETF, it's very unlikely that you're going to see it go down 10% in a day,
Okay.
right? So I think by doing by investing in something like that, you're also building your resilience as an investor. You're also able to give yourself time to educate yourself on what investing is, reading books, listening to podcasts, getting an understanding of it. I think that's very important. Otherwise, you're gonna just say it's a scam, right? That's the truth. So yeah, I think that's the reason why. I think stocks can be volatile. Like they're crazy. You have to have a lot of. You have to have a strong mindset not to be like, I'm not selling this. Right. So yeah, that's the reason. That's the truth. And I always say that to people. I think people do get excited. About it. Even with Bitcoin, people are excited now. Oh, let me, Bitcoin. And I've said this I responded to a comment actually on my YouTube channel the other day, like, oh, because we were talking about, we wasn't even saying that you shouldn't invest in Bitcoin, but we kind of say just invest in what you understand. And the some of the comments like, oh, you're in for a rude awakening with not Bitcoin, and my response was, I've been in Bitcoin since 2017, and I've seen this several times. Everybody's excited when it's up, everybody's talking. When it's down, nobody's talking. So there's a lot of that. There's a lot of hype that you have to be aware of. Everybody's telling you buy this, buy that. Just be very careful.
And that's the time not to buy, right?
Yeah,
when everyone talks about it.
Yeah, when everybody
too
kind of
late,
talks
I've
about
heard.
Bitcoin, like for example, oh, it's going to 100K. That's when people jump in, and then let's say it goes down. That's when they're like, oh my god, like I'm done with this. So that's not the right way to invest. Investing is again over the long term, consistently, monthly. Right, it's not just a one-time thing where we're like, okay, now Bitcoin's up, now
Throw
I
all my money
invest,
into
and
it.
yeah, exactly. No, that's not how you invest.
Okay.
It's very consistent. You do it over time. You do it consistently. You do it monthly, and then over time your money will grow. That's how you invest. And I think by starting small, that's how you build those habits. So start off with like £10 a month. That's not gonna really hurt you.
You see, even when you say £10 a month, that will probably be a shock to the system for so many people. Because even for myself, before I started investing and learning about it, I never thought it was accessible to people like me. I just thought investing was for the elite in society or for rich and wealthy people. I didn't realize how easy it is to actually start investing and how little money you need to get started.
Yeah, you know what's crazy? To be fair, COVID changed a lot of things, because I think prior to that, you wasn't really able to invest with little money, like £1 now. Now you can do invest, which is incredible. Like it's crazy. Because I remember when I first started wanting to invest in. You could invest in index funds, low cost. Like Vanguards have always been there, Fidelity, but I think individual stocks from memory, I'm pretty sure I was looking, because I was gonna invest in a few stocks, and it was like, I think you'd have to pay like, I think something like £15 per trade, like per investment. I was like, this is not worth it. Like, because I was gonna do like £100, like.
And you pay
Losing,
£15 to
yeah,
invest.
like, this is not worth it. I'm not gonna do this. But now it's so cheap. It's so cheap. Like you can start £1. So now you can start with £10 a month and just see. Okay, let me understand what this investing thing is. Let me read a few books. Let me listen to a few podcasts. Okay, oh, my index fund, my ETF is growing, or my index fund is growing. Right, not all platforms, by the way, people is gonna let you invest with £10 a month. And also, let me just say, I'm not a financial advisor. Just
You
that
have to make that disclaimer.
I just want to make that disclaimer because and also I'm not like, I'm really not trying to say anything individual so that people don't go and follow and say, oh, our Savvy Wallet said
told me to do this.
Like, I'm not telling anybody to do anything. I think it's just more trying to provide guidance because I didn't necessarily get that guidance. We didn't have any of these like conversations happening. No podcasts, no YouTube videos to tell you this how to invest. We are in, honestly, we're in the best age for people who want to get into this stuff because there's so much information out there that you can really change your life. So yeah, I would say start small. Start baby steps and then build over time. Don't try not to get into the hype. Try to stay away from that. If somebody's telling you put your savings into something, don't do it.
No.
Just don't do it. Yes, some people are lucky and yes, they can flip that into something, but I bet you there's more losers than winners in that situation.
That's the thing. And so, because it's funny you said that, or it's good that you said that, sorry, because a lot of people, especially on social media and TikTok, Instagram, are always trying to get people to sign up to these opportunities, these investment opportunities, to put down £50 and make £10,000 within the next 24 hours. How can people kind of be aware of these things, and what is it kind of things that they need to look out for to avoid them falling into these investment traps, would you say?
Yeah. So a lot of that is probably scams. I remember I was getting impersonated on
my
Instagram.
God, same.
It's, to be fair, I think they've done better now. They've got rid of that. So I was impersonated on Instagram. Somebody was using the brand name to try and sell, and they're very smart. They do it in this kind of period where there's all the hype and talk, and also when people are struggling as well. They do that because that's, you latch onto people's desperation. So I would say anybody that's offering you any like sort of like where they say they can flip something, make sure that they're qualified in the sense that if you have to be qualified to, I think, provide investment advice and I think suggest certain financial products, you have to be qualified. So you have to find out that they're actually qualified. Check that they're on the register, FCA register. So you can check that. You can just Google, tell them what's your company name, You can verify them. I would jump on calls with them. But I would say realistically, if we're talking about turning £50 into 10,000, I don't know any investment that does that. I don't know any investment that does that. In what time frame? Yeah. So I would say also just ask other people. If you know, if there's any of your favorite, like, you're listening to Tolu's podcast, ask Tolu. Come and ask that, oh, I've heard about this investment. Is this legit? Do you think it's legit? And Tolu would come out and tell you, nah, that's not cool. So reach out to us. We can actually help out. Do you know what I mean? I think do that before. Don't get desperate. Trust me, I've heard like I think when this cost of living crisis happened, like people were getting desperate. I was hearing all types of stories, like all crazy stuff. People losing thousands and then losing thousands and then going back to give that same person thousands. It's a mass.
Insane.
Honestly, like this stuff is mad.
And people are so easily duped because even a family friend of mine messaged me, and this is a family friend, and she got a message from a fake account of mine. And then she was like asking me questions about the conversation that we had, but it wasn't me. It was with this impersonator. And I was just like, no, don't give them anything. If I was going to ask you for money, I wouldn't even ask you for money, number one. And that should have just been alarm bells to you. Like, why is Tolu messaging me, asking me for all these details? And this is even a family member that was having this big conversation with a stranger thinking it was me. So it can easily happen. Like, you have to pay attention.
Yeah, it's crazy. And wow, that's mad. Like, but people, I think people know me enough that they shut it down.
So I was like,
somebody actually reached out to my brother, which is mad. Yeah. As which is weird. Like, I'm DMing you through the gram. Like, and not only that, but you're the way you're addressing it
It's
straight away. It was like, this is not my brother. Firstly, you don't even speak like
It
this.
doesn't
Like,
even
you mad?
sound like
Yeah,
me. Yeah,
yeah,
exactly.
yeah,
So I
yeah.
don't
So
talk like that. Come on.
it's mad. Yeah. So it can happen. To be honest with you, I'm not gonna lie. They're getting more sophisticated.
True.
Is the truth, and they're getting more innovative in the way that they kind of do these things. I'm even like, they're not only targeting the public, they're targeting creators. I've even got one. I'm even getting like scams now, people pretending to be from Red Bull.
Oh
You know,
yes,
I'm getting that
yes,
one.
yes,
You know,
yes.
they're now pretending to be from these organizations.
Yeah.
You know, so they are getting really smart in the
Mm.
way that they do it. So you have to, what I do, I'm not gonna lie to you. I always verify everything.
Yes.
I always verify anything personal information. Honestly, if I get a phone call, I don't care what bank it is.
Mm.
I'm not giving you my personal.
Absolutely
I'm
not.
calling you.
I'll call you back. Yeah.
I'll call you. Get your number. I'm
Mhm.
calling you because you just never know, right?
Mhm.
I think sometimes we give, and there's nothing wrong with it. Sometimes we give the banks too much authority to the point that somebody pretend to be them and know that, and you just giving your details. So you got to be very, very careful, very mindful. Don't be clicking any links. Anybody that offers quick returns, 9 out of 10 is probably a scam.
Yes.
They're offering quick returns. Why they're not doing it for themselves?
Right.
Like, you have to ask all these questions. Okay, then do that. If you can do £50, get £50. Flip it yourself. Why you come to me? For
Exactly.
£50. Yeah, you know what I mean. So you have to just think of these things. I know times are tough. I know that it's hard, but
Mm.
try to not. The way I like to look at it is like, your reward will come further down the line. I think sometimes this stuff is like a test
Mm.
for you to have that resilience, and that your rewards will come later.
Thank you. So hopefully, guys, take note of what
Yeah,
Ato is saying and don't be scammed because you work
trust
too
me.
hard for your money for you to let some
Yeah,
scammers to take it from you. So
yeah, it's mad.
okay, so then going back to investing, then, or a little bit more on the
Mm,
subject of investing for newbie investors wanting to get started,
mm,
like what tips and advice would you give them to get started? Firstly, and then the second part to that question would be
mm,
any advice you would give in order to help them overcome that mental barrier that they
yeah.
may have about the fear and risk of
Mm.
investing.
Yeah. So with investing, you know what I realized was I still get a lot of questions from people. So I think there's a bit of a disconnect sometimes with people is that, okay, cool, how do I invest, right? Like, what do I start with, right? So I think it's important to say for any kind of investment you make, in terms of into this stock market. So I think I said I was going to explain this. So when we talk about the stock market or markets, essentially stock markets are like different stock exchange. And on different stock exchanges, you can buy and sell these different companies that we're talking about. So in the US, you've got something called the Nasdaq. That's one form of stock exchange. In the UK, I think it is FTSE is our stock exchange, that we have. So just understand that it's essentially like a marketplace. If you think of it like an eBay on Amazon is a marketplace where you buy and sell stuff.
Mm.
But what you're buying and selling is, stocks in these companies. So just if you just always picture it like that,
Yeah.
you then have a better understanding of what it is. So try and always relate it to, okay, it's a marketplace. As I said, is a marketplace. So that's what it is, right? Essentially it's a marketplace where you are buying, shares in a company from another individual,
Mm-hmm.
right? And they're selling to you, right? And again, that price is determined by, demand and supply, right? Um, so that's it at a high level. That's what the stock market is. Um, so where I think people get confused is, okay, so how do I invest in the stock market? So how you invest in the stock market is through platforms, right? So platforms will give you access to invest in the stock market. We mentioned Vanguard previously. There's Trading 212. I use Trading 212.
Mm.
That's what I've been using for. It's coming up to 5 years next year. But I've also used Fidelity in
Mm-hmm.
the past. There's lots of platforms,
Yeah.
investment platforms. Now, what you kind of want to look out for each platform is, do they have any sort of fees, right? Is there like platform fees, like in terms of like signing up? Do they charge you like any annual fees? Are there any fees to buy and sell investments? So you can do all this research, just type fees, right? So if you find an investment platform, just Google, okay, does this platform have
Mm.
fees? And then, to be fair, all these companies are better at breaking it down for you and
Yeah.
telling you. And there's a lot of websites that will also do comparisons for you as well, if you want to, all of this stuff is at our fingertips now. So yeah, really you need a platform first. That's the most important thing to say. For you to invest in the stock market, you need to have access to a platform, right? So that's the first thing. Then two, right? Actually, I can go back a little bit. So even with the platform thing, that's what's kind of known as the do-it-yourself route, DIY. Let's say you're painting at home, you can, paint, or you can hire somebody to do the paint for you. So also with investing, you can actually get people. If you're like, you know what, I don't want to read up about this. I just want somebody else to do it for me. You can. There are companies out there that will invest on your behalf. But just know if they do that, they're going to take a cut, right?
Yeah.
It makes sense, right? They're doing the groundwork, they're going to take a cut, right?
So that's what financial advisors do, right?
Financial advisors could do potentially do it for you, and also technically robo-advisor, like Moneybox, Nutmeg is another one. There's other ones as well. I think Wealthify is also another one. So those three.
Robo-Advisor is an actual platform that does it for you.
Yeah, what they'll essentially do is they're very streamlined. So you'll essentially kind of log into these platforms, and they will say, okay, in terms of investing, are your appetite risk, are you like a bit higher, are you a bit medium, are you a bit lower? And then for each of those categories, they'll say, okay, if you're medium, then we're just going to invest it in this essentially for you. So they'll do a lot of that groundwork for you, and they're very good at just streamlining it and making sure that you don't have 100 options.
Okay.
Right? Like it's like
an AI investor.
Almost, yeah. In a way, robo-advisors, in a way, yeah. So it's like they do it, like they'll essentially do it for you, but they'll take more of a cut, right? So if people just Google robo-advisors, a lot of this stuff will come up. So the route I was talking about by finding your own investment platform to do it yourself. A lot of people do that because I guess you save on the fees, and over time, actually, you're saving a lot of fees. And if you understand what you're doing and you do it yourself, actually, you can kind of set and forget it, is the truth, right? You kind of do the investment once, you figure out what you're going to invest in, and then your monthly direct debits come in, and actually you're saving on the fees that what the robo-advisor is. So it's up to you to decide if you want to start off with robo-advisor just to get familiar with it and then move on. You can do that as well. But I would say for even both of them, still educate yourself, because even with robo-advisors, I even see like a lot of comments sometimes when I look at reviews of these companies. Or people like, oh, my investments hasn't even grown. I've not even. So it can still happen with them. And why it's probably not grown is because you didn't even understand what they were investing. So you still should have an understanding of
what's going on.
Yeah. So for every investment, you can look at what's called. I think it's called a fund sheet. So it kind of just tells you, okay, this investment aims to do this. This investment is investing in this sector or these countries, or these are the top 10 companies. So there's this sheet, and it tells you this is what the risk rating is out of, I think it's out of 7. This is what the risk rating is, right? So there is that information. It's a 1-pager. I think it's a 1 or 2-pager that you can read. So yeah, I would say definitely be comfortable with just doing that. It's initially a bit more groundwork initially, and after that, like, it's like researching a car or holiday. Just see it like that, right? Okay. I would say with this stuff, to get you into a place where it's not boring for you, think of it like, oh, I'm researching how I'm going to get wealthy. That's how you have to see it. If you just tie it to tie it to something that gets you excited. How I'm going to get rich. How I'm going to get that car. I don't know. Whatever it is for you. But just tie it into something that's going to get you excited instead of, oh, is this a boring investing thing again, man? What is this about? So the DIY route, it's really what you're doing is you're trying to find an investment platform. If you're not going via robo, find an investment platform, and then actually on both robo and this investment platform, there's kind of 2 ways you can kind of go. You can go through stocks and shares ISA, which is, people like to say is a tax-free wrapper. That's even more confusing when you say that. Like, oh, what's a tax-free wrapper, bruv? Like, what is that?
No, it's true.
What is that? Basically, it's an account. It's an investment account that is essentially tax free, right? So it means that any if you sell any of your investments and you make a profit, or if you get any dividends, and I'll explain what dividends is from your investments, it's tax free. The tax man ain't coming for you, which is great. So you can go down that route, which is obviously most people do that because, why not, right? You get 20,000 every tax year, so it makes sense to do that. Because the great thing about that is, if imagine you build a £1 million investment portfolio over 10 years in a stocks and shares ISA by let's say like over 10-15 years, and you invest into that, right? You essentially, the taxman can never be like, oh yeah, no, if it keeps on growing, they can't. If you get in income from it, they can't do nothing. They can't take nothing. So that's the benefit of it, right? And you know what's crazy? I think I've got a stat here that only 3.9 million people are using stocks and shares ISA in the UK. It's only 6%. So it's poor take up rate for this stuff. And that's because obviously it's lack of financial education. That's the truth. So there's a huge amount of us, 94%. Okay, let me even take out children. I don't know how much the children population is, but let's say, okay, the children population is another 30%. Sorry guys for the geeks that have got to Google this. I'm not saying I'm correct here. I'm just saying it, right? So what is still 60% ish? Still 60% of population still not utilizing it. It's a huge amount. So we've got a long way to really bridge that gap. Like, it's a huge gap that we need to kind of bridge, which is why I'm very passionate and talk about it. And I love it. I'm not gonna lie, I love investing. It's because I love business. I love business, so I love investing. I'm very interested in it. I'm very interested in getting more people doing it. So yeah, the stocks and shares ISA is what most people will kind of start with, because they might not use their £20,000 limit in a tax year. And what's great now is that before, previously, you could only contribute to one stocks and shares ISA every tax year. Now you can have several. So it's sick. You can have several different platforms. I would say, take advantage of, because a lot of these companies, they have offers. So take advantage of them, right? A lot of them, like, we'll give you up to £100 here, we'll give you up to £50. Just take advantage of open all of them and take advantage of get the free money, right? So it's a stocks and shares ISA.
But that £20,000 tax-free wrapper is across all of those accounts that you've opened. It's not per account.
It's not per account. Sorry. Make that clear. It's across all of the accounts. So try not to obviously go over that. I mean, if you've got the money to go over that, boy, you don't need my guidance, boy. You don't need my guidance. No, I'm joking. No, we all need guidance. Even high earners need guidance. But most people go through the stocks and shares ISA. So again, it's just an account. It's an investment account that's essentially tax free. Or you can get a general investment account. That's what they call it, GIA, general investment account. And that's essentially not really tax free. There is obviously a certain threshold when you have to pay tax, and that depends on how much you kind of earn. But just to be safe, if you're not using your limit, stocks and shares ISA is definitely like the way to go. And then once you've kind of, most of these companies, that's what they'll say. Once you've gone to like a website, you go to this investment provider's website, you say you register, get your details, then they'll ask you what type of account you want to open. And once you've opened that, then you start looking potentially at what you invest in, right? Whether, again, we said no stocks for beginners, right? But you potentially look at different ETFs that you can invest in. And then what you kind of want to do is you want to automate that as much as you can. So if there's any way to just where it's like a direct debit that's coming out your account, you don't need to really think about it. That's what you want to do. Now, what to do to get past that hurdle, like that barrier, right? I would say start small, £5-10. Start tiny, right? With investing, they say try always to invest money you can afford to lose, because we understand that in the short term, the money could go down. That's why I said for anything less than 5 years, your portfolio could be down, and then the final year goes up. So that's why you should always try to put money aside that is not, that you need right now. It's like pension. Pension is also investing. Like a lot of people,
which a lot of people do not know.
We're all investing already. So people don't know that. But I think why people are more comfortable with pensions because they ain't got no choice.
Yeah, it's exactly.
They ain't got no
It's
choice,
just happening
right?
and we don't know about it really.
Yeah,
So
you can't take the money
yeah.
out until you're 65. So you ain't got no choice. So see investing like that, I ain't got no choice. See it as that like account that is just okay, this is building me wealth for whatever time in 10, 15 years. See it as that and okay, cool. Always question yourself. The money I'm putting in here, do I need this in 5 years? Do I need this in less than? If it's less than 5 years, just but £10 if you can start with
Yeah,
that, then I'll say
good.
consistently do that. So yeah, that's how you should be able to, get over the barrier of that.
That's
Yeah.
good. That's really good. No, thank you for sharing.
Welcome.
And I think the only thing I would add to that, to anyone wanting to start investing, I would just say make sure you have your foundation in place. So I think sometimes people want to run before they crawl. So if you have like high interest debt, for example, that you need to pay off, don't maybe focus on investing just now. Maybe work on getting your foundation stable and maybe paying off some of that high interest debt before you start investing. Because I think sometimes we want to build, but the foundation isn't stable. So
100%.
I would say get that foundation in place first and don't get too excited and run with the investing when you haven't got your house in order.
People there are susceptible to that because if they're in high debt, they're like, want to flip this money quick to pay off the debt. So I think you have to be very careful with that. I think what Tolu is saying is absolutely correct. I think your better focus is to think about how can you get that high interest into 0% or lower interest rate situation. There's lots of options. I'll say definitely tackle that first. They say somebody on my podcast, they don't even call it emergency fund. They say thank goodness fund.
Okay.
Thank goodness, which I love.
I like that.
So have a thank goodness fund.
Yes.
As well. Of just some money just for a rainy day. Because again, you remember with investments, is money that is beyond 5 years. So if you're putting your life savings into it, it's not the best. Basically, what I'm saying is, if you don't have any savings and you're putting it into your investment, that's not the right way to do it. The right way is, as you say, making sure that you're getting rid of the high interest rate, switching it around how you can, having a few months worth of savings, and then you're comfortable. Then you can be like, okay, let me start with the 10 and the £15 a month.
Exactly. And then of course, do your due diligence as well. So research as well. Don't just follow 100%. What you see other people doing, or you've heard a friend do this and you just jump on it without actually knowing and understanding what you're doing. 100%. Because I fell into that trap when I started my investing journey. I remember my sister. Oh no, let me not put on blast. But I remember my sister telling me to invest in Boohoo stocks one time because apparently they were doing really well at that time. I think that's my one stock that is performing the worst at the moment. It never recovered. Wow. So I was like, no, I'm not making that mistake again. I'm not just going to do something blindly because someone told me to do it. I need to actually do my research and due diligence first.
It's because I would say if you want to invest in stocks, you have to have interest in business and have that interest in understanding their financial reports, have that interest in or unless you have an advisor that's doing it for you, right? But I would say take the pain away from yourself and the hassle, and the ETF route is better for you because it's less thinking about it, right? But if you're really passionate and interested about it, then stocks is for you because then you're learning about it, you're really into it. But if you're not, as I understand that, I don't think most people are. So I would suggest steering away. Even if somebody tells you, oh, Tesla's going up here, just trust me for your own peace of mind. Because I'll tell you the truth about investing in stocks. Even when these stocks go up, there's a period of down for them as well sometimes. And you emotionally have to deal with both. Yeah. And a lot of people don't tell you that. Yeah. So even like this person, that was saying the thing about Bitcoin, that's what I was trying to highlight. A lot of people don't tell the truth. A lot of people just tell one half. You're telling people, Bitcoin, you're in for a reckoning. Not knowing that, okay, it could go to 100K. It could go to $1 million, potentially. But it could also potentially go to 20K before it goes to $1 million. You're not telling people
the full story,
how the people, when it goes from 100K to 20K, it hurts people. Yes. It's stressful. You have to deal with that stress. So a lot of people don't tell the full story. It's not some straight line up. Look at any graph of any company. There is no straight line. Yeah. It's like that. So yeah, it's like a roller coaster. You're dealing with the fun and high, and you're dealing with anxiety. Oh my god, we're gonna drop off a edge. So that's what it's like. Investing, it can be like that, especially in stocks and things like crypto and stuff like that. I want people to be prepared. They're not prepared. Everybody talks about, oh, you're gonna be rich, you're gonna be a millionaire, it's gonna go up to this, but they're not telling you, oh man, you're gonna go through some pain. It's gonna be painful.
That's
It's gonna
true.
be tough. And also another thing they don't say is that a lot of those people, because I was one of them, when it goes down, they sell. They sell
Yeah.
because they're like, oh my god, I'm freaking out. So understand that as well.
Yeah.
That when somebody's telling you that, they're also not they're not. If they tell you that too, then you understand. You're like, okay, but be mindful that it could drop
Okay.
half 50% within a year. Then you fully understand. Okay, cool. Do I really want to invest in this thing that potentially could drop in 50% in a year? You've been told, you've been informed. But if you've been sold something like, oh, it's gonna keep on going up, of course you're gonna invest. Because you're like, oh yeah, this is doing well. So yeah, a lot of people don't share both sides of the coin, really. And I like to really highlight both because
Yeah.
I've been there, I've seen it, and it's a daily thing that you battle with all the time. So
No, it's good. No, thank you for sharing that. Oh my gosh, this conversation could go on for another hour easily. But before we close, I just want you to maybe share any final pearls of wisdom. You shared so many already in this episode, but any final advice, or final words of wisdom for our listeners on the topic of investing and growing their wealth.
Yeah, I will say just be just very patient with yourself and just be kind to yourself. I'm trying to practice that with people and just be mindful that not everybody's journey is the same. And be patient. I think just be patient in anything that you kind of do, not just the investing journey, the wealth building journey, you educating yourself. There has to be an element of patience. I understand in the current society that we're in, everybody wants it now. They want to, but I think that if you get something now you don't value as much because you didn't really work hard for it and you kind of, it's almost a throwaway. But I think if you work for something, you understand what it takes to get there, and then you follow the steps, I feel like you do potentially value it a bit more. So yeah, I'll just say with the investing thing, just definitely educate. I think that's super important. Understand that by investing you can definitely build wealth. It's another path to build wealth. It's almost a lower barrier entry because with property you need to have a deposit. But with investing, like we said, we could start with as little as £1. So it's a bit lower entry, right? And some people might be listening to this and say, oh, but like we were saying before, you need to be rich. No, you don't. You can start small. And then as your income increases, as you maybe, I don't know, maybe start a business or whatever, you can start investing more, right? You just want to start building a base essentially from the beginning, and you may not see any kind of dividends immediately, but again, that's why I say be patient, because you know it's essentially you're kind of like planting a seed, and then you're hoping for that seed to
germinate,
to germinate and grow, right? That's how you have to kind of see it. As you can't just be like, I'm just gonna show up and have a tree. No, it don't work like that, right?
Sadly, it would be nice if it did, but
it would be nice. But what do you know in this world that just appears? I don't know if there's anything in this world that just appears, right? So see it like that, right? To at university to get a degree, you study for 3-4 years. For you to become a senior in your job, you work for 3-4 years. You don't just appear as a senior. You wouldn't be ready for it, right? So anything in life, right? That's what life is, right? I think for some reason with money, people try to not apply the same rules that are in other parts of life to money. It's the same rules, right?
it's good.
As we're saying. So just remember those same rules. In your job, you're patient for that promotion. So be patient with your money, growing and building wealth for you as well. I think it's super important for that. So yeah, that would be my final.
And that was a perfect way to end the episode, to be honest, because that was perfect. Yeah, take your time, be patient, and trust the process. And it's not going to be an overnight thing. Like even people that are overnight successes, so we think, there's always a 10-year backstory for them to get to that position of being an overnight success. So yeah, it's true what you said. Nothing just happens like that instantaneously. Exactly. So there's no reason why you'd expect your money to grow in that way. And I guess if it did happen that way, you wouldn't appreciate appreciate it as much anyway. So yeah, no, thank you so much, Atto,
Welcome,
for
Tolu.
coming
No,
on the show
great,
today.
great conversation. Thank you.
No, I've really enjoyed it, and hopefully we'll have you on again.
Yeah,
soon.
definitely.
Yeah, part 2.
Yeah.
Talk more about the podcast.
Yeah.
Yeah, and actually before we go, if you could just tell us a little bit about the podcast and where people can find you, listen to you, and connect with you after the show.
Yeah. So, Savvy Wallet Podcast. So you can find it on YouTube, Apple Podcast, Spotify. Yeah. So if you just type Savvy Wallet, it'll come up Savvy Wallet Podcast. I'm on Instagram as Savvy Wallet. Instagram, TikTok, I'm on Savvy Wallet. I don't really use Twitter. I'm spreading myself too thin. It's too much work. So yeah, as a podcast, we talk about personal finance, talk about business. We're trying to diversify it as much as we can. Really, just have conversations to help people in all areas of life. Realize that, you know, the more I'm talking with people, the more like this whole adulting thing is like needed to be a segment in you know, school, even interviewing. Like I just having a conversation about interviewing yesterday. It's so true. You don't even get taught how to have a job interview, which is essential for you to get a job, right? True. Even that is so important. There's so many important things that we're not taught. It's crazy. It's crazy. So and we get taught so many meaningless stuff. It's mad. The stuff that will actually help you in life,
that gets skipped over.
You know, money, interviewing, relationships.
People
what relationship conversation we ever had, you know, in school? People skills, right? Not like nothing really like to really help you. So yeah, so we try to help where we can. Obviously, mostly focusing on business, personal finance, and you know, mindset is our main topic. So yeah, thank you. Thanks for having me.
No, thanks for coming on. All right, take care. Bye.
Thank
no,
you.
I don't know why I did that. Sorry,
Why did you do it like that?
No.
Relax.
Bye. Like I'm on the phone call. No, yeah. Thank you for coming on the show. Absolutely amazing having you on as a guest.
Welcome. No, I really appreciate you having me. Yeah, like I said, part two.
Yeah, part 2. So come watch this space. If you guys want it, leave it in the comment section below. But yeah, no, thanks, Atto.
Thank you. Thanks, Tolu.